Good morning. We will pay attention to the notes today. Remember that the notes are a summary of your capital account and your current account. In this exercise, they give us the capital amounts. That is the balances at the end of the year. So after there was an increase and a decrease in the capital. So you have to work backwards to determine what was the opening balances. Then they also give us the balances of the current accounts. That is always the balances at the beginning of the year, because you never work in your current account during the year. The only time that you use your current account is at the end of the year to record the payments that must be paid to the partners. The drawings account is always closed off at the end of the year and transferred to the current account. So the drawings balance will always be the closing balance because there's no balance at the beginning of the year. So first of all, we have to record the interest and the salary and the bonus. So adjustment will be done where the accounts are debited and the current account is credited. If we look at the capital, we see that the opening balance we have to calculate because the closing balances are given. So after Smith took 50,000 out of the business, his balance is 200. So the beginning of the year it was 250. Tony Land increased his balance with 10 to 100,000. So the beginning of the year it was 90,000. In the current accounts, we will first of all show the expenses that must be paid to the partners. So we will indicate the salaries, bonuses, and interest. Remember that current account is an equity account. Equity increases on the credit side and decrease on the debit side. So any amount on the credit side of the current account will be positive, and on the debit side will be negative. We will add these three expenses together to work out what is the subtotal. Then we add the two together to get the total subtotal, and if we subtract that from the profit that we calculated, we will determine what is the amount that must still be paid to the partners. So first of all, we calculate the subtotal for the three expenses, subtract this from the total profit to determine what is the amount. Then this 745,355 will be divided according to their profit sharing ratio. Then I will add the three expenses plus this profit to determine how much each partner will receive out of the profits. So all these amounts are on the credit side of the current account because it increases the amount that's owed to the partners. Then we will debit the current account with the drawings, and if we subtract from that net income the drawings, we will see how much money is retained at the end of the year. Then we will show our opening balances. Tony Land had a debit balance, therefore his balance will be in brackets. Van Smith has a credit balance, therefore his balance will be positive. And if we subtract the retained income at the beginning of the year from the amount in the year, we will determine what is the retained income at the end of the year. If I take these amounts into account at the end of the year, they must correspond with the balance in the current account, because this note is a summary of all the entries that appeared in the current account. And here you can see that the balances brought down correspond with the balance in the note.